Very good evening to all of you. Welcome to the very first practical session for the year 2023 for demand supply trading methodology. Myself, Surjit Kakar, and today is Sunday, 24th of December 2023. Now, before we move ahead, let's get done with the basic formalities. So make sure you people go through the disclosure, which talks about the representation risk disclosure, risk involved in the market, and also about the copyrights. So coming back to today's session, today's YouTube live session is for the practical application of the demand and supply methodology, and that is what we will be doing almost every other Sunday, where I will be taking some examples. To those examples, we will be applying the complete process which you learned in the basic lessons, advanced lessons. Now, if you are joining straight away the live session and you've still not gone through the demand supply course, then do ensure you do that. The links are available in the description. The course is now an absolutely free course. Whatever I'll be talking about, if I'm talking about some links or some documents which you need to download, all those links are available in the description. So make sure you access them from the description, and I've given links for both English as well as in Hindi. All right, so let's get started. Perfect. So we'll start with our analysis for today. But before we move ahead, let me add a few things. One, if you look at the right side, you can only see in percentage. You do not see in price. There are reasons for it. And the reason is that I will not be disclosing the name of the symbol. And that is why I also want to hide the price. But once the trade gets triggered, right, and when we review it, that is the time I will reveal what symbol it was when we did the analysis. So not to worry, just because I'm sharing these examples does not mean we'll forget about it. Whenever in the future they get triggered, that is the time I'll reveal what we analyzed and at what session we analyzed. But at the time of analysis, we will focus more on the educational side of it, and that is why the symbol names and the values will be hidden. All right, so when it comes to trading, I always talk about that trading has to be a very mechanical and rule-based process. And to make it mechanical and rule-based, I have shared two documents with you. One is the rule book, the other one is the walkthrough. So we'll talk about both of them. Again, the links are available in the description if you want to download it. As we move through the session, at the end of the session, I'll also take some of the random questions, queries we have in the chat. But one thing which I would definitely like to touch upon just now is, like Upendra, you saying that if I can do the session in Hindi. So we have already done the session in Hindi for the same example. The Hindi sessions will be on our other channel, which is Trading Munch, for which the link is available in the description. So if you are comfortable with Hindi, you can subscribe to my Hindi channel. We will be doing the Hindi analysis on Sundays as well. The decided time is 2 p.m., but based on my availability, things might change. But we have already done the session today at 2 p.m. in Hindi. So again, I'll add those of you who are more comfortable in Hindi. We are doing the sessions in Hindi as well on Sundays itself. And for joining the Hindi sessions, you can subscribe to our Hindi channel, which is Trading Munch. Again, the link is available in the description. All right, so like I said, talking about trading always has to be a very mechanical and rule-based process. Now, why it should be mechanical and rule-based, I have explained this in a video, and the title of that video is How to Start Trading. And again, the link is available in the description. So if you've not gone through that video, do ensure you go through that video, which will help you understand why you need to be mechanical, why you need to be rule-based, and what process you should be following when you start to trade, right? So all those things have been taken care in that particular video. So since we need to be mechanical and rule-based, we need to create something for us which is called as a trade plan. So what is a trade plan? Trade plan is basically a collection of all the steps, all the rules which you will be following, from identifying your trades to qualifying your trades to taking your trades to managing your trades. So each and every step you do has to be part of that trade plan. Now, when you start learning something new, initially, definitely it's challenging for us to create a trade plan for us. And that is where these documents, they come handy for you. The very first one is the trade plan steps. We can also call it as the walkthrough or the flow chart, which guides us what we need to do as a demand and supply trader step by step. Now, all these steps, they have their own elaborate rules, and those rules are available in the rule book. So what we'll do is, during these practical sessions, we will be using these two documents to understand how to plan trades very mechanically, very rule-based, using these two documents. Now, one thing which I would like to add here is that the rule book that I've shared with you is a conservative approach, because whenever we are learning something new, it definitely makes sense that we start with a conservative fashion. But with time, with experience, if you want to make some modifications to it, yes, you can make those modifications to make it better suit with your personality style. But as of now, it's a very conservative approach with which you should be starting. But with experience, with time, modifications can be done. So what is our step number one whenever we start planning our trades? So whenever we start planning our trade, our step one is to define our trade purpose. Now, what do we mean by trade purpose? Trade purpose basically implies the expected duration of the trade. And the duration of the trade is from the time you enter the trade to the time you exit the trade. Now, when I'm talking about the exit here, the exit can be the target, the exit can be break even, the exit can be your trailing stop loss, the exit can also be the stop loss, right? So any kind of exit. Now, why are we starting with the trade purpose as our step number one? And the reason we are doing this is because when we start planning our trades, the charts that we use, they are time-based charts, and we have a number of time frames available to us. So the very first challenge we face is that there are so many time frames available to us. So out of these a number of time frames, which time frame should I be using for my analysis? That's the very first challenge. And to overcome this challenge, we do not start by randomly selecting any time frame. We again start with a very logical process. And that logical process is first to define our trade purpose, because the logic we'll be applying here is the longer I want to be in a trade, the bigger the time frame I will be using for my analysis. And similarly, the smaller I want the duration for the trade, the smaller the time frame I will be using for my analysis. So what I have done is I have divided these trades into 4 different purposes, and we call them as hourly income, daily income, weekly income, and monthly income. Hourly income implies a trade where my expectation is that this trade can last for an hour or maybe few hours. Daily income, a trade which can last for a day or few days. Weekly income, a trade which can last for a week or few weeks. And monthly income, a trade which can last for a month or few months. Now, by definition, I said daily income is a trade which can last for a day or few days. But when I'm specifically talking about, let's say, the NSE market, which is only open for 6 hours and 15 minutes, and then what happens, it closes, and then whenever is the next trading day, again we open. So since it's not a 24 hours market, I'm pretty sure all of you would have experienced that almost every other day when the market opens, some stocks they gap up and some stocks they gap down. Now, because of this gap up, gap down, what can happen is you can get profit, which is bigger than your profit you were expecting in case you get a gap in your favor. But in case you get a gap against you, you can also lose more than what you were willing to lose on that particular trade. So that is why my recommendation to all of you is that initially, when you are still learning the methodology, you are trying to gain that experience. So during that skill development time, that time where you're trying to gain experience with the methodology, you should be doing hourly incomes and daily incomes strictly as intraday trade, because we don't want to take that unnecessary overnight gap risk. Now, weekly monthlies, we are anyhow not expecting that we will be getting the exit the same day. Here we have no choice but to keep them as overnight trades, but that does not mean we cannot have gap against us. It can happen, but the probability reduces because now we start leaning against bigger time frames. So yes, initially, hourly dailies, strictly intraday trades, weekly monthlies, overnights can be done. But with time, with experience, if you want to include daily incomes into overnight trades, nothing wrong with that, because like I said, by definition, daily income is a trade which can last for a day or few days. So my step one is I need to define my trade purpose, and let's assume I opted that I want to plan monthly income trades. Now, once I have selected my purpose of trade, what is going to happen? From the rule book, I'll get to know what time frames I should be using. So if I go to the rule book and we go to page number 28, just give me a second again. Perfect. So we start with the topic, which is multiple time frame analysis, because demand supply methodology is not based on single time frame. Demand supply methodology is based on multiple time frame analysis. Now, what are the multiple time frames that we use? We use a minimum of 4 different time frames, and we call them as the high time frame HTF, the intermediate time frame ITF, the lower time frame LTF, and the refining time frame RTF. Now, every time frame has its own designated purpose. Higher time frame is used for demand supply curve analysis. Intermediate is used for trend analysis. Lower time frame is the time frame where we will be identifying our areas of demand and supply for our entries and exits. And the refining time frame can be used for multiple purposes, like fine-tuning the zone, different kind of entries like your type 2, type 3 entries, or in case we need to apply some additional rules, that is also where this time frame can help us. Next, what are the 4 different purposes of trades? We have already talked about it. What is HIT, DIT, WIT, and MIT? So now the question comes that for every purpose of trade, what time frames will I be using? And you get the answer from this table. Now again, I'll add this particular table is for the NSE, because like I said, the market is open for a very short duration, which is approximately 6 hours and 15 minutes. But if you are trading markets which are open for longer durations, then you can refer to this table, which is on page 32 for commodities or for Forex, or maybe even the international markets that are open for longer duration of markets. Even if you're trading cryptos, then the same table is what you'll be looking into. But coming back to NSE, because we are open for a shorter duration of time, that is where we will be using this table to select our time frames. Now, since I have opted that I want to plan monthly income trades, so from this table I got to know what time frames I'll be using, in this case monthly, weekly, daily, and 60. Plus, I also know what is the purpose of each and every time frame. Like in this case, higher time frame will be monthly, which will be used for curve analysis. Intermediate will be daily, which will be used for trend analysis. Lower time frame is 60. That is where we get lower time frame is daily, where we will be getting our SETS from. SETS stands for stop loss, entry, target, and size. And in case we need to use the refining time frame, then our refining time frame will be the 60 minutes chart, which can be used for multiple purposes like fine tuning the zone, type 2 type 3 entries, or maybe if I want to apply some additional rules, that is also where this time frame can help us. So as soon as I'm done with my step number 1, now I have the clarity to what time frames I'll be using, and in this case it is monthly, weekly, daily, and 60. Plus, I also know what is the purpose of each and every time frame. So my challenge number 1 is taken care of. I know my time frames. I know what analysis I'll be doing on each and every time frame. Now, once we are done with our step number 1, we move on to step number 2, and that step number 2 is selecting scripts. Because if I talk about, as an example, the NSE market has approximately 2,000 companies listed on it. So it's not very easy for us to analyze 2,000 companies every day. So what we need to do now is we need to um, uh, create a process for us which can help us get a smaller list out of these 2,000 companies. And the way we do that is by using certain computer programs which are called as scanners or screeners. And the way these scanner screeners, they basically work is that we input certain conditions into them, that these are the conditions I'm looking for. And then these scanners or screeners, they identify that out of these n number of symbols, which symbols are matching with those conditions. And whatever is matching with those conditions, it gets shortlisted for us, and that is how we get a smaller list. Now, a few examples of these scanner screeners. Example 1, if you go to my website, you will see under the free tab, I have created some scanners for you, which are based on some moving averages, and they are helping us shortlist some symbols. Second example, if you search on my YouTube channel for scanners, you will be able to find few videos, different scanners, different logics. You like any of those, you can use that. Third example, on my YouTube channel, you search for sector analysis, you'll be able to find a video on sector analysis, which can again help you in shortlisting symbols. Fourth example, on my YouTube channel, search for top-down analysis. You will be able to find a video on top-down analysis, which can again help you in shortlisting symbols. So these are 3-4 different examples, but you're not restricted only to these 3-4 different scanners or screeners. Now let me show you a few examples here. So like I was talking about, that once you go to our website, under the free tab, you have the stock screener option. And here you have screener for all different 4 trade purposes, your HITs, DITs, WITs, and MITs. Because I opted, I want to plan monthly income trades, I can click on MIT. I can run the long scan and the short scan. So here you can see the long scan is still saying running. So if something like this happens, that it shows you it's running, so you just refresh it, it will get refreshed. And now you can see it is telling me that it has not filtered anything, because whatever conditions I've given out of these 2,000 companies, nothing is matching with those conditions. That is why nothing is getting shortlisted. Now, if I go to the short scan, you can see the short scan is shortlisting 2 symbols for me. Now, the very first thing you need to remember, and it is very, very important, no matter what scanner or screener you're using, whatever list you get, you can never blindly buy or sell these stocks. So just as an example, just because you're getting these 2 stocks as a list from the short scan does not mean you can blindly sell them. Once you have that list, what you have done now is, from 2,000 plus companies, you have identified 2 symbols for you. You will be analyzing these 2. If any one of these match with your trade plan, then it is going to be a trading opportunity for you. If nothing matches with your trade plan, you don't have any trading opportunity. So always remember, scanner screeners, they never tell you what you need to buy or sell. They just help you getting a smaller list, and then you'll have to manually go through that list and see what matches with your trade plan, what does not match with your trade plan. Now, this can happen many times, that the list might be very small, or maybe no results are getting generated. Just give me a second. All right, so just a second. Why am I not able to go back to the long scan? Let me do that. Yeah, so here you can see maybe no results are getting generated, or maybe the list is very small. So if you get a very small list, or maybe if you don't get any results and you want to make this list a little bigger, then what you can do is, you can see that in this scanner we have about 5 different conditions. So out of these 5 conditions, you will disable the third one and you will run the scan again. And I'll do exactly the same thing for the short scan. I'll disable this one and I'll run the scan again. So now what you can see is that initially I was getting not even a single list from the long scan, but now it is giving me a list of about, just a second. Now it is giving me a list of about 69 symbols. And if I go to the short scan, it is giving me a list of 8 symbols. So we have around 69 plus 8, which is 77 symbols to look into. So it's not that you have a very big list of 500 or 600 symbols to look into. The list is still very small, just about 77, which can be easily analyzed, I'll say probably within about half an hour, 45 minutes to the max 1 hour. Now, if you feel the list is still big and you want to further make it a little smaller list, then you can use different filters. Those different filters can be, just as an example, as if now it is using the complete cash market, I can say, I only want to look into the symbols which are also getting traded in the futures, so I can run the scan again. So now you can see we were having 7, but now it is down to 5. And similarly, if I go to the long scan, which was giving me around 69, and if I do the same thing here, I shift it to futures and I run the scan again. Now you can see we have only 14. So now I have 14 plus, how many were there on the short scan? 14 plus 5, which is 19 symbols to look into. So you can see you can use different filters to make this list bigger for you, to make this list smaller for you. Plus, this is not the only scanner available to you. If you go to the screener section on this website, you will see you have over 1.5 lakh scanners available to you on this particular website. And this is just one website. If you do a Google search, you'll be able to find a number of websites, a number of scanner screeners. Here you can see some of them are based on fundamental scans, stop left, then you have candlestick patterns, range breakouts, bullish scan, bearish scan, then you have your intraday bearish, intraday bullish, crossovers, a number of scanners. So whatever you feel is the right fit for you, you will use that scanner to get a smaller list for you. Because like I already said, no matter what scanner screener you're using, the results you get, you cannot blindly buy or sell. So that is why it doesn't make any difference what scanner you're using. At the end of it, you will have to do your own analysis. So whatever you feel is the right fit for you, use that, get your results. Now, in this case, you saw that we were able to get a list of about 77 symbols. Now, once you start analyzing them, a few things which you will realize. The very first one is that you will realize that you're wasting a lot of time analyzing such symbols where you don't even have quality demand zones or quality supply zones on the lower time frames. You're wasting a lot of time analyzing such symbols where you don't even have a zone. And the reason for that is because these scanners we are talking about, they are not based on demand supply zones. They are based on either conventional technical analysis or they are based on fundamental analysis. So just because something is getting shortlisted does not guarantee that you will have a zone on the lower time frame. Second thing is, even if you have a zone on the lower time frame, that zone might be far away from the current market price, due to which you will have a long waiting period before the prices are back to your zone. And during that waiting period, what can happen is whatever price action follows, that might even disqualify the trade by the time it is back to your zone. So these are some of the challenges we face when we are shortlisting symbols based on conventional technical analysis or fundamental analysis. And to address these challenges, we have also created 2 custom built tools, which is called as the alert service and the screener. The alert service is purely based on the lower time frame. Screener can be applied to the lower time frame as well as the higher time frame. If you want to have more information about it, the links are available in the description. We'll not be getting into it. But how it solves these 2 issues: one, both of them are purely based on demand supply zones. So this issue, which is one, is taken care of because they are based on demand supply zones. The symbols are only getting filtered because they have demand and supply zones on them. And second, alerts are generated as soon as the zone is formed. So your current market price will always be close to the current market price. Will always be close to a zone. That is where we take care of that not being very far away from the demand area or the supply area. And in the screener, you can input your own value, how close you should be to the zone before it gets shortlisted for you. And this process, my step number 2, can be as simple as that. I don't want to use any of these scanner screeners because I want a small list. I will only be analyzing my Nifty 50 stocks, or maybe I have my own favorite list of stocks which I want to analyze every day. So again, you have a number of choices available. Out of this, whatever you feel is the right fit for you, you can use that. It's not that one way is the right way, the other way is the wrong way. At the end of it, you will have to manually do the analysis. So whatever you feel is the right fit for you, you can use that scanner, you can use that screener to get a smaller list for you. Now, once you have a list for you, we are ready to move ahead. And let's assume that in that list, the very first symbol was ABC. So what are we supposed to do now? We will start with ABC. We'll analyze it. If it matches with our trade plan, we have a trading opportunity. If it doesn't match with our trade plan, we move on to the next one, then the next one, then the next one. And that is how we identify our trading opportunities. So let's assume the very first one was ABC. Now what am I supposed to do? Now I need to go to the, sorry, I've just skipped a step. So now I need to go to the lower time frame. So now the question here is, what is my lower time frame? And we got the answer from our step number 1 when we opted that I want to plan monthly income trades. I got to know my time frames are monthly, weekly, daily, and 60 out of which daily is my lower time frame. So in this case, daily will be my lower time frame. And what am I supposed to do on the lower time frame? On the lower time frame, I need to identify zone. And by zone, we mean any of these 4 structures. It can be a drop-based rally, rally-based rally, rally-based drop, or a drop-based drop. So let's go to our symbol. And we are taking as an assumption that whatever process we used in the second step, based on that, we got a list. And in that list, the very first symbol was ABC, and that is what we are analyzing. Now, before we get started, what I'll do is I'll disable all the drawings and all the indicators, and we'll start with nothing drawn on the chart. Now, the very first thing I would like to add is that demand supply methodology is purely a price action based methodology. So what do we mean by price action? Price action means the action done by the price. And what action can price do? Price can only do 2 things. It can either move up or move down. It cannot do anything else. But when price is moving in a very narrow range, right? Again, I'll say when the price is moving in a narrow range, we call that narrow range as the period of pause, or we can also call it as our basing. Now, initially, when we start learning demand supply methodology, our eyes are not trained to identify these structures. So that is the time what we do is to start training our eyes. We start with a concept which is called as boring exciting candles, because you will see most of the zones. Again, I'm saying not every zone, I'm saying most of the zones can be identified based on boring exciting technique. So that is why it becomes a good starting point. Plus these indicators, the boring candle indicator, the explosive move indicator, these are absolutely free indicators which I've created for you. You can use them for free forever, and they will help you in start training your eyes. But once your eyes are trained, what you need to do is from boring exciting, you'll start leaning towards price action, because what price action will do is price action will start refining your zones even better, right? So that is what you need to do, that eventually you will start moving from boring exciting technique to the identifying the period of pause, or understanding the price action. Now if I talk about understanding price action, just give me a second, let me clear this, right? If I talk about understanding price action and I start from the current candle and I start looking down, just if you're trying to eyeball what the price action is showing me, you can see price action is showing me that here we moved up, we paused for a while, and we started moving up. So without using any indicators, can you see I can still identify where are these structures of demand and supply. Now for me it is much more easier because I have been doing it for a number of years. But those of you who are just starting with the process, I know it can be a little bit challenging, and like I said, that is where these tools can help you initially in identifying the zone. So example, like I said, the explosive move indicator is a free indicator. So what I can do is I can apply the explosive move indicator. I can also apply the boring candle indicator. So you can see that if I start from the current market price, I start looking down, the explosive move indicator is telling me that we have an explosive candle. Just next to it, we have this basing candle. Just next to it, we have an exciting candle. So now I have all the 3 components of a zone, which is my leg in, my basing, and my leg out. And what is this structure? This structure becomes as a rally-based rally. But what I will be doing in these sessions is to make the sessions short and more mechanical. I will be leaning purely against the demand and supply zone indicator, which will make the process faster and easier and also mechanical for us. That is how we'll be doing our analysis. So you can see, irrespective whether I was using price action or whether I was using the boring exciting technique, or even if I'm using the demand and supply zone indicator, we have exactly the same zone getting marked on the chart. And that is what demand supply zone indicator does. It's more like your GPS, that you don't have to identify the zones now. The indicator automatically does it for you, and all you need to do is just keep applying your trade plan to those zones and see whether it qualifies or it doesn't qualify. Anyways, so yes, now we have identified a zone. We will mark that zone. We'll draw our 1:1, 2:1, 3:1, 4:1. So now, just in case you don't know how to use these tools, again, the link is available in the description for setting up the tools, where I have given you the complete walkthrough videos. So make sure you watch those videos and understand how we can use different tools to draw the zones, to mark these proximals, distals, which is also our entry and the stop losses, and your 1:1, 2:1, 3:1, right? So all those things have been taken care in the videos, for which the links are available in the description. All right, so yes, my step number 3 was to identify zone on the lower time frame. So let's get back to our flowchart. And do we have a zone available? The answer is yes, we do have a zone available. Now, this is where demand supply traders initially they make the biggest mistake. And that biggest mistake is they find any demand area on the chart and blindly start buying, or they find any supply area on the chart and blindly start selling, which is incorrect. You can never blindly buy or blindly sell at any demand area or any supply area. Once the zone has been identified, the next step is to qualify it. And for qualification, we have a two-step process. In step 1, we'll qualify it based on certain conditions. And in step 2, we'll qualify it based on the booster scoring, where we will be understanding its quality and the probability factor. And based on these factors, we will be making our decision whether we want to use that particular zone or we want to skip that zone. So once you have identified the zones, like I said, the first thing is we'll be looking into certain conditions. And the very first condition we'll look at is that is this zone a case of level on top of level? Now, why do we start with level on top of level? Because if it proves to be a case of level on top of level, we might have to shift from the zone we have already identified to a different zone. So that is the reason we first check if any modifications need to be done. We make those modifications before we start moving ahead. And how do we check whether it is a case of level on top of level or not? It's a very simple concept. So let's assume you have an intermediate time frame zone, and the same intermediate time frame zone divides into multiple zones on the lower time frame. So again, when your intermediate time frame zone divides into multiple zones on the lower time frame, we call it as a case of level on top of level. Now, to be a case of level on top of level, the first thing we understand from here is that my lower time frame zone has to be inside the intermediate, which is called as a coinciding level. So if we have a coinciding level, it might be a case of level on top of level. But if we don't have a coinciding level, it can never be a case of level on top of level. So that is how we'll start. We'll check the zone we have identified. Does it coincide with any intermediate time frame zone or not? If it coincides, then we'll verify do we have multiple zones or not. If we have multiple zones, it becomes a case of level on top of level, otherwise not. So let's go back to the chart. Now, if you talk about the demand supply zone indicator, it has a feature where you can define your higher time frame, intermediate time frame, refining time frame. So as a monthly income trader, my higher time frame is monthly, my intermediate is weekly, and the refining is 60. So once I define my multiple time frames and I check mark automatic settings for the higher time frame, intermediate, and refining, what is going to happen when I change my time frames to these particular time frames, whatever settings are to be applied for that particular time frame, it automatically gets applied. So in this case, if I go to my intermediate time frame, which will be the weekly chart, you will see that now the indicator is not just identifying quality areas, it is identifying all zones, and that is what we need on the intermediate time frame. So this was my lower time frame zone. So wherever is my lower time frame zone, is it coinciding with any intermediate time frame zone? The answer is no. You can see on the intermediate, we don't have any zone available here. So since my lower time frame zone is not coinciding with any intermediate time frame zone, we know it cannot be a case of level on top of level, because to be a case of level on top of level, like I said, the first condition is it has to coincide. So level on top of level not applicable. Now this zone is not because of a gap, therefore will not be applying the gap rules. Pivot non-authenticity is also not applicable, because pivot and non-authenticity we only apply to drop-based rallies and rally-based drops. And talking about unstable equilibrium, this is also not applicable. Now don't worry, because this is the very first practical session. We are just starting with these practical sessions. So today's example is not a case of level on top of level or gap or pivot or non-authentic or unstable equilibrium. But as we progress, I'll be taking all kind of examples. We'll be taking examples of level on top of level. We'll be taking gap examples. We'll be taking all these examples. So eventually we'll build up. And again, today's example is also a very basic textbook kind of an example. As we move forward with these sessions, I'll take some complex examples as well. So not to worry, we are starting slowly and steadily so that you start understanding the concepts. And as we progress, we'll have different kind of trading ideas to look into. We'll have complex trading ideas, we'll have very simple analysis, right? So we'll take care of all those things. But don't worry, I know everyone wants to learn everything the very first day, but it's not possible. We'll only be building upon it as we start progressing ahead. So none of these conditions are applicable. So the fact is, if these conditions are not getting applied, it cannot disqualify the zone, because to disqualify the zone, first they need to be applicable. So if nothing is applicable, the zone cannot be disqualified. So in such a case, is the zone qualified for us? The answer is yes, the zone is qualified for us. So now that I know the zone is qualified, I can move to the next step, which is the booster scoring. So let's start with the booster scoring. Give me a second. All right, so if we start with the boosters, the very first one is freshness, and we can definitely see the zone is fresh. After leaving the zone, price has never been back to the zone, which definitely makes it as a fresh zone for us, and a fresh zone always gets a score of 3. If you talk about the strength, we have an explosive move, and explosive move gets a score of 2. Now, those of you who have not gone through the lessons, right, the basic lessons and the advanced lessons, you might be getting confused with this. So that is why I said, if you are straight away joining the practical sessions without doing the theory, you might be feeling a little blank or left out. So do ensure you do the complete course. And again, the links are available in the description. All right, time at the zone. How many candles do we have in the basing? We just have one candle, gets a score of 2, and reward to risk ratio will take it as an assumption. Now, why do we take it as an assumption? Because nobody knows how the arrival will be, right? Prices can come here, base, and then start coming down. So I have about 3:1, right? What can also happen is price can move down, start basing here, again come into the zone. Now we have less than 1:1. So depending upon the arrival, the reward to risk ratio can change. But one thing is for sure, we'll only be taking the trade provided we have RR. That is why we always take it as an assumption at the time of doing the analysis. But at the time of taking the trade, when we are requalifying the setup, we'll double check, do we have the required RR or not. So if you talk about the quality with the assumption of reward to risk ratio, it's a high quality zone with a score of 10 out of 10. Now, the next thing is the probability factor. So the first thing we check for the probability factor is, where is the zone located on the demand supply curve? So if I go to my higher time frame, and as a monthly income trader, a higher time frame is monthly. So here you can see, because I've already applied the settings for automatic settings for HTF, you can see as soon as I went to the monthly time frame, it automatically did all zones and automatically did the curve analysis for me. So now I can see that this is my curve. This is my very low of the curve, which is my monthly demand area. This is my very high of the curve, which is my nearest monthly supply area. So you can see from the current market price, nearest monthly supply, very high of the curve, nearest monthly demand, my very low of the curve, and the area in between has now automatically been divided into 3 parts, which we call as the low of the curve, the middle of the curve, and the high of the curve. So yes, this is why I said, I'll be using the indicator. It will make the process mechanical and faster for us. And now I can see my zone is basically lying in 2 areas. And this is where again a confusion comes, that if a zone is overlapping 2 different locations, how do I decide what location should I be calling it as? And the answer is very, very simple. The location is always decided from the price where you are entering the trade, not where you are exiting the trade. So this is where you will be entering the trade, which is in this gray shaded area, which is called as the middle of the curve. So we know we are not closer to demand. We are not even closer to supply. We are somewhere in between, which does not give any does not give us any edge as far as the curve analysis is concerned. So middle of the curve will get a score of 0. Now, talking about the trend, and the trend analysis has to be done on the intermediate time frame, which is weekly. So on the weekly time frame, you can see the indicator will automatically do it for me. It is telling me that we have 2 supply violations. So if you go back in history, candle by candle, you will see this demand not violated. Then you have this demand not violated. Then you have this supply, which is a rally-based drop violated. So that's your first violation, rally-based drop, which you can see here. And that's your rally-based drop. And then we have a drop-based drop violation, which is this drop, base, and drop. So since we have violations of supply, and if the supplies are getting violated, that implies prices are making new highs, and that can only happen in an uptrend. So that is why the indicator is automatically doing the zone violation analysis and telling us that we are in an uptrend. So since we are in an uptrend, the trend is supporting us, but the location is not supporting us. That is why we cannot give it the highest score, which is a score of 1. We'll give it a score of 0.5. The next thing is the move from the zone. We need at least 4:1 move, which you can see has already happened. That's your 1:1, 2:1, 3:1, 4:1. So we probably have maybe a 7:1 or 8:1 move. So yes, the kind of move we want has already happened, gets a score of 2. Talking about level on top of level, oops, it is a score of 0. We have already verified it was not a coinciding level. It was also not a case of level on top of level. The next thing we'll check is that can it work like a trap? Now, how do we check that? It's a very simple process. Just take a horizontal line wherever your proximal is. and then slowly start pushing it up, trying to visually find an area where prices have been bouncing over and over again. So can you see if I zoom out, um, you can see that this area has acted like resistance, almost acted like resistance. Here it has acted like support. So it does show a really nice and neat area. In fact, if I try to bring in more history, let's see how it looks like. So you can see even in the past, it has been acting like resistance, 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 support. Here also it has acted like resistance. So we have a pretty clean area of support and resistance, which is right above our zone. So what is going to happen? People who believe in support resistance, they will see this as an area of support resistance. And now what are they supposed to do? When the prices they come to support, they are supposed to buy. And when they are buying, their stop losses will be placed below this area, which will be sell orders because of their stop losses. Now, in case it does not work like support and we get a breakout, then the people who are into breakout trading, they will also start selling. So we understand that by the time we'll start coming into this area of demand, there will be a lot of selling coming into the market because of two reasons. One, people who bought, their stop losses will be getting hit, plus people who believe in breakout, they will also be selling. So now these people who start selling, they are now making two key novice mistakes, and those mistakes are: mistake number one, they are selling after a decline in price, which means they are selling at a cheaper price. Mistake number two, they're also selling in an area where the chart has proven to us that back in history, demand exceeded supply, which could be the only reason for prices to move up. So these people who are now selling now, which we can call as the bears, are now making that novice mistake, and those bears might get trapped into this area of demand, and that is what we call as a bear trap. All right, so I can see few more messages in the chat box. I'll just want to touch upon it. Other messages we have, we'll look into it at the end of the session, and those messages are about the taking the session in Hindi. So I've already talked about it, that Hindi session will be on our other channel, which is our Hindi channel, Trading Munch. On that, we have already done the Hindi session for the same analysis today. So again, if you want the analysis in Hindi, you can subscribe to my Trading Munch channel. Link is available in the description. On Trading Munch channel, we will do the analysis in Hindi. On this channel, we'll do the analysis in English. So we are doing it in both languages. So for Hindi sessions, please join the other channel. For English sessions, this is the channel we'll be doing it on. All right, so coming back to, yes, it can work like a bear trap. And since it can work like a bear trap, we'll give it a score of 1. So if you look at the overall scoring, we have a score of 10 out of 10 for quality, which makes it as a high quality zone, and a score of 3.5 out of 8, which makes it as a low probability zone. So a high quality but low probability zone can be traded as a type 2 or a type 3 trade. So after doing the analysis, we got to know that this should be taken as a type 2, type 3 trade. That is what we got to know from our boosters. Now, what do we do next? Now, no matter how high the quality, no matter how high the probability, remember that any trade can be a stopped out trade, right? Just because it is, let's assume if we do an analysis, it is a 10 out of 10 and an 8 out of 8 zone, does not mean that it is going to be a sure shot winner. Any trade can be a stopped out trade. So you always have to be ready for the worst case scenario. So based on your risk management rules, you'll do your proper position size calculation. Next, whenever the prices are back to the zone, we'll have to re-verify, because the markets are not static, markets are dynamic, conditions are changing every other second. So before we enter into the trade, we'll have to re-verify, does it still qualify based on my trade plan? If the answer is yes, we place our order based on the entry type. In this case, it is a type 2 or type 3 trade. And once the trade has been executed, the last step will be trade management, where step 1 is 1:1. We'll make it as a break-even trade. And after that, if we get the opportunity to trail onto it, we'll start using our trailing stop loss. So today is the very first analysis we are doing. But as we progress ahead, what is going to happen? Some of these analyses which we would have done in the past, they will get triggered. And that is the time we'll also start getting into the trade management concepts. When do we make it break even? How do we use our trailing stop loss? So all those things will come as we progress ahead. And yep, that basically covers today's analysis. And like I said, I'm not disclosing the name of the symbol on the day of analysis, but eventually once these trades they get triggered, that is the time when we'll be reviewing it. I will be disclosing the name of the symbol as well. So before we get into the messages I have in the chat box, now I'll not be able to take all the messages. I'll take some random queries out of this. But yes, one thing I would like to add, that is, if you are liking these sessions, do ensure you like the video, you share it with your fellow traders, your trading group, so that people can take advantage of it, because now it is an absolutely free course for everyone, be that the theory, be that the practical sessions. All right, so let's see, what do we have? All right. So methodology. So first one is, can we use it on Heikinashi? No, you should not be using it on Heikinashi. You should only be using it on candlestick charts, because Heikinashi is a modified version where things are getting calculated from the price action which has already happened, right? So we don't want to use something which is based on a calculation. We want to use something which is exactly what the price action is showing us. All right, so let's see what we have. Booster scoring Excel sheet download kaise hoga? Help me. All right, so talking about the rule book that I showed you, the flowchart that I showed you, and we also have a much more advanced version of this Excel sheet, and all those are collectively together available for download. Again, the link is in the description. It's a zip file. Once you download it, you'll get all these three documents. The one which I'm using, that is not available for download, and the reason I'm using this is because this is presented uh, vertically, so you can see everything at one glance. The other one is designed horizontally, which makes it a little bit more challenging at the time of analysis to understand. So you people will have the more advanced version where you don't have to give the scoring, you just have to select the conditions, the scoring is given automatically, plus it will also help you log your trades. So that is available in the description. All right, let's see what we have. uh, so Hindi I've already talked about 2-3 times. The Hindi channel is a different channel. All right. So next is, when we exit at break even, what should be considered, win or loss? All right. So see again, even when we talk about break evens are basically two categories. One break even is that you are putting your break even stop loss at a price which is taking care of your brokerage as well, right? So if you're taking care of your brokerage, you cannot put it into a loss, right? But if you're not taking care of your brokerage, then you might have a very small loss. Now it's your choice whether you want to keep it as a break-even trade, or because it is a small loss, you want to put it under the category of a small losing trade, right? That is going to be your call. Plus also when you're trailing it, whether you want to trail it by taking into consideration the commission, or you just want to uh, trail it without considering the commission and just trail using it as a break even at your entry price, right? That's going to be your call. Or it should be used as many pair to trade, or stick to one or two trades in intraday. All right, so see, the challenge with demand supply methodology is that you cannot enter a trade anytime, right? You have to wait for the prices to come back to your demand zones or supply zones, and then you take your trades when the prices are back. So if you're just looking at one or two symbols, there is nothing wrong with it if you're comfortable with having very few trades, right? Because you might be a person who might not want to handle too many trades. You just want to be very selective and just maybe look into few scripts. If you get some opportunity, good enough. If you don't get an opportunity, you're perfectly fine with it. But if you are somebody who wants that I should get a trade almost every other day, then you have no choice but to have a bigger array of symbols to look into, so that you start having trades almost every other day. So what to do at curve analysis? If I'm trading long trade, then curve available at a demand, but not available in supply. All right, so you're basically talking about when a symbol is making all-time highs, or maybe when a symbol is making all-time lows. So in case of all-time highs, will not have supply to do the curve analysis. In case of all-time lows, will not have the demand areas to do the curve analysis. So like I said, today is the very first practical session. Not to worry, as we move ahead, we'll be taking all these conditions, where eventually we'll be taking care of all these things, right? All these different concepts we'll be looking into. All right. So can you show some examples of marking zones on MIT, WIT, DIT's trade plans? See, most of the trading ideas which I'll be sharing, you will see there'll be MIT trades. And the reason for that is because, like I said, that the analysis part will have to get a small list for us, and then we have to go through that list to identify trading opportunities. Now, I personally only take MIT trades. So since I'm only taking MIT trades, I'm already identifying trading opportunities for me. And out of that, I share some opportunities with you, right? That is what I'm doing. Now, if I have to get into WITs, DITs, HITs, then I'll again have to use another scanner to get a list, and again have to do the analysis, which I, as of now, don't want to do, right? Because when I'm doing my own homework, I want to share with that from that homework itself. So yes, at times, if something I have identified and it can also be done as a DIT trade, or let's say as an HIT trade, or maybe a WIT trade, I might share it. But otherwise, you will see most of the trades which I'll be sharing would be the MITs. But irrespective, whether you're doing HITs, DITs, WIT, MITs, the analysis does not change. The process remains exactly the same. Nothing is going to change. All right. Okay. All right. So let's see what else we have. Great. Is the spreadsheet download for your followers? So yes, I've already answered that question. We have the spreadsheet for download, but that's a more advanced version of it. Okay, so next is, why can't you start a 1 year paid membership session? Okay, see, the thing is, if I start it as a paid membership, it is still going to be exactly the same thing. So when you're getting it for free, why do you want to pay for it? Right, so that's for Captain Jack Sparrow, right? So Captain Jack Sparrow, you don't even have to pay for it. It's exactly the same thing which I'll be doing, even if you guys are paying for it. And yes, I was initially doing it for quite a while, but I wanted to take a break now. So that is why I thought, instead of, today also somebody was asking me, I said, I have been coaching for almost over 11 years now. I guess I started back in 2012, and I wanted to take a kind of retirement now. So I had two options. One was to stop uh, teaching altogether. The second one was to do it at my comfort. So that is why I chose the second option. Yes, the first option is still open for me. We'll see eventually down the line what I do about it. But as of now, you enjoy it, right? You get the course for free, you get these sessions for free. Enjoy it. All right. So daily live lecture will be held. No, it's only on Sundays. Only on Sundays I'll be doing it. So the decided time is, for the Hindi session, we'll be doing it at 2 p.m. Indian Standard Time. For the English session, we'll be doing it at 10 p.m. Indian Standard Time. But yes, there might be days where I might not be available, where these sessions and days might get rescheduled. So that is the reason I wanted to keep these sessions as free sessions, so that I'm not tied up. If I'm available, I'll do those sessions. If I'm not available, maybe I might miss or I might reschedule. But yes, we'll only be doing it once a week. All right. So looking forward. All right, great. Let's see, what else do we have. All right. Right. So these nuts, like you said, cause a bit confusing on your PDF. So not to worry. I do understand when you're learning something new. Initially, it can be a little bit challenging, but as you go through more practical sessions, you will start getting clarity of it. So not to worry. If it's just the very first session. With more number of sessions, you'll start getting comfortable with it. All right. All right. Will you be posting the recordings of the review? Absolutely. So once we move ahead with the sessions, if any of these trading ideas that I shared with you, they get triggered, we will always start with the reviews, and the recordings of all these sessions will be available. All right. So do you have the indicator for MT4? No, it's not available for, sorry, MT5. It's only available on TradingView. All right. Great. Uh, Perfect. All right. Let's see. So I'm just going through the comments that I have in the section in the chat box, right? So don't it's not that I'm lost. I'm just going through those comments really quick. All right. Perfect. Okay, so Bhavesh says, any indicator for automatic zone finder and trend finder. So that is what I was talking about. Demand supply zone indicator does exactly the same thing. Probably you'll join late. These nuts, you said, why skipped your question? I didn't skip your question. Okay, you mean why make your course free? I want to get exposed. See, again, if you want to pay for it, that's your call, right? What I can do is I can create a link where you guys can maybe do donations, but I just want to keep the course for free for now, and that is how it is. All right, so sorry if I skipped that particular query, right? Because too many questions popping up, and like I said, I'm just randomly going through some of them. All right, if you have any course for basic and advanced options. So we do have a course for options as well, and that is also an absolutely free course, Vajit. It is available on my YouTube channel. You can just go through the playlists and you'll be able to find it there. Okay, I couldn't find your boring candle indicator showing blue color. So like I already said, the links are available in the description. So there is a link to the video on how to set up your charts. Go through that video. That will guide you how to do all those things, right? So not to worry about it. All right, let's see. Great. Great. So I guess that is where I'll be ending the discussion today, because if I keep going through it, more questions will keep popping up. But yes, I hope these sessions are helpful to you. And like I said, if you have any friends who are into trading, or if you're into trading group, do ensure you share the course with them. This might be helpful to them as well. So again, thank you so much for joining in. I will be seeing you now next Sunday, where we'll again be getting into another practical example. Until then, stay safe. Enjoy your Sunday evening. And again, yes, wishing you all Merry Christmas, right? So enjoy your Sunday evening. Take care. Bye bye.